I think it's not temporary. First of all, it's hard to roll back wages once you roll them up. I mean, right. They go from 15 to 12. So I would say we have a new baseline in terms of wages, sort of generally. You look at every commodity price, right? Copper, lumber, make your list. Look at what's going on in energy even before the colonial, pipeline issue. Look at housing prices. Look at Bitcoin, right? Everything is inflating.
Inflation, we're back on that topic again, and today we're going to be listening to the thoughts of legendary billionaire investor Bill Ackman as he breaks down what he's currently seeing out there in the market with regards to this high inflation and also the best businesses to invest in during these high inflationary periods. With that said, let's jump on over and listen to what Bill Ackman has to say around inflation.
Kind of a once in a moment in history, right? You have people emerging from a pandemic with the animal spirits that come from being locked in their homes, right? So that's dramatic. You have all of that hit. The vaccine rollout is actually in the U.S. certainly it's been fantastic. So you have a lot of people feeling being fully vaccinated, going back to their lives, and then you have the Trump stimulus, the Biden stimulus, infrastructure, an extremely accommodative Federal Reserve, and everything concentrated in a couple of quarters. So that
is the Federal Reserve too accommodative, do you think?
I think they're going to have to raise rates for sure. And I think, they adjusted their policy, in my view, just at the wrong time. A preemptive policy toward inflation, I think is a better approach, particularly in a world where we have, massive stimulus, economic stimulus.
Is it too much stimulus? I mean,
I think with rates where they are, there's a very good risk of the economy overheating, which is why I think rates go up.
So it seems very obvious that Bill Ackman is seeing a lot of inflation out there at the moment, and he thinks that they will have to increase interest rates in the near future. Obviously, it's hard to predict when they will increase interest rates. And the negative effect on this is, obviously, it will probably curb the inflation, but it will also have an effect on the equity markets. Money will become a lot harder to get, interest rates will be going up, so in turn, you would think that the equity markets will have a bit of a pullback. Look, that's just a very high-level look at it. By no means am I an economist, and that's my basic understanding of it. So Bill Ackman's recently come out on Twitter on December 11th, where he's seen a big separation between what the government's actually reporting to actually what's happening with regards to inflation. Now, he says the largest owners of nationwide single-family rentals are reporting a 17% in rental increases. He's saying housing inflation is unlikely to abate based on supply and demand trends. The inflation that households are actually experiencing is raging and well in excess of the reported government statistics. Also, using the more empirical measure in the calculation increases today, core CPI from 4.9% to 9%, and also consumer price index from 6.8% to 10.1%. So he's seeing quite a big difference between what the government's actually reporting to what's actually currently happening out there in the market. And obviously you want to take a grain of salt with this as well. Don't just listen to what Bill Ackman has to say on the matter. But a lot of this, to be honest, is all out of our control. We're better off when we're faced with these sort of situations where we're maybe seeing high inflation or current raise in interest rates, is to more just concentrate on the businesses within our own portfolio, as this is what we can control. We can decide on what we buy or what we sell. So this is what we should be devoting more time on, rather than trying to speculate on what the Fed's going to do, or are they going to raise interest rates, are they going to lower them. So in this next clip, we're going to have a look at what Bill recommends are the best businesses to look at investing in through a high inflationary period.
I was going to ask, given how 2021 has played out, what's your view on the big themes that investors globally really should be preparing for in 2022? Were there any stocks or sectors, ideas investors should be thinking about and owning?
Look, I think the world's an uncertain place, and we're not traders at all, right? We're looking to own things that the stock market closed for a decade. We're happy to own it. That's certainly true for Universal and our other companies in the portfolio, but we own these super durable, robust businesses because I have no idea what the world's going to look like in 6 or 12 months, or I have a pretty good idea, a view of what things are going to be, but they may not be that way. So you want to own businesses that have pricing power if, inflation turns to be a lot more durable than temporary. I think inflation expectation has changed fundamentally. That's also a driver of inflation. So I think we're going to see inflation. I think that there's going to be I think there's going to be a more likelihood of stock market divergence. Some companies doing very, very well, some companies doing very, very poorly. Companies that can't pass through wage inflation and goods inflation to their customers are going to do poorly, if I'm right about inflation. So the better the business, the better it does, I think. And you want to own the best businesses in the world, in an uncertain world, in an inflationary world. If you're good or better than we are at trading commodities, there's probably a ton of money to be made. It's not what we do.
So we want to be investing into businesses that have pricing power and can easily increase the rate of their products or services or whatever it may be that they offer to us, the end consumer. A number of these different companies within the portfolio, they can easily increase prices only marginally, especially for me and you. We're not going to jump ship in case if prices increase by 10 cents or it costs an extra 50 cents for a pizza, you're still going to buy that pizza. So these are the sort of companies that Bill Ackman likes to invest in, just generally, but also through these high inflationary periods. So let's jump on over and have a quick look over Pershing Square's current portfolio to see what sort of businesses we've got within that portfolio. So now if we have a look over the companies in Pershing Square Capital's portfolio, all the companies within this portfolio I think should be able to pass on the increased cost of goods, wage inflation onto us, the end consumer. What are your thoughts on Bill's portfolio? Do you think it would fare well through a high inflationary period? Drop in the comments below what your thoughts are on it. Also, what are you currently doing within your portfolio? Are you looking at selling down maybe some of these businesses that won't perform so well through a high inflationary period? Or you're looking at buying into businesses that will perform well? Or you're selling out of everything entirely and investing into gold or Bitcoin or some other currency? Anyway, I'd love to hear you guys' thoughts. Drop in the comments below what you're sort of currently doing within your portfolio. With that said, that's going to wrap us up for today's video. If you did enjoy today's video, please do us a favor, hit that like button. And if you'd like to see future videos, please consider hitting that subscribe button. I know most of my audience currently aren't subscribers, so if you enjoy what you watch today, definitely do us a favor, hit that subscribe button. That way you'll stay up to date when the next video drops. All right, stay safe. We'll catch you in the next video. Cheers, guys.